Good morning, everyone. Good morning, SMF Street Traders. You will have your second update about that GDP that we told you in the beginning of the year. Before January 1st of 2010, we had put out our forecast for U.S. economic growth, and why the whole segment was about how stimulances would work, what the government was doing when they were injecting them, what the outcomes, what the cause and effect would be, and we've ran that course. And basically, I want all of the SMF street traders around the world to understand that as far as the U.S. structure is what we're talking about. So the United States still has a lot of challenging problems. The deficit is only going higher. The outside of all of that, though, the cause and effect was when you throw enough water on the fire, you put it out for a while, but guess what? There was a piece left that was smoldering. And in this case, relative to the Dow, I'm going to be talking about U.S. GDP. And lots of things, lots of indicators, and here are the things that we teach people right here. This week, we're heavily loaded with a lot of stuff. But notice how the subject here, SMF Economic Calendar, SMF downgrades U.S. GDP to 1.5% for 2010. That's what we did a year ago in December of 2009. Is that we said the first half of the year would be strong when no one thought it would be. We knew that it would. But we knew that everybody and all the bulls were on the back half of the year. And that was going to be the greater part of 2010 and the best ranges and things like that. We just ran the 2010 July earnings, which we said would be outstanding. But guess what? Forward looking, they're not. And we have used up those 6 quarters of earnings from the bottom of the deleveraging to re-leveraging all the way up within corporate of America and publicly traded companies, re-leveraged, recapitalized, their balance sheets executed. That's why we have a very high unemployment rate. And that's why the initial claims rate last week was at 500,000. It's going up. It's going in the wrong direction. Now, what we're talking about is the GDP. StockMarketFunding.com, SMF Street to Main Street, is telling you that GDP is going to weaken. It's the same thing that we've said in our other radio shows months ago. So we are telling people this year 1.5%. Next year, you could actually get below 1% in 2011. And it's very likely. Reason why is because U.S. citizens will be paying higher taxes. There isn't any direct correlation in stimuluses directly to small businesses that provide the back streets of America jobs and income. And we're falling way short on all of this, my friends. So basically, when we take a look at the Dow chart, and we're going to take a look at Dow Jones chart, relative to this downgrade that SMF is giving, and it's, you know, we're just reiterating it. We gave it months ago. Months ago. They're on our blogs. You can find the videos, whatever you want. And the GDP deflator second estimate. On the same day, you're going to have the Michigan Consumer Sentiment, the final for August. Not only that, today is August 23rd, 2010, and it's right now 8:41 a.m. On the 25th, we got durable orders. We got durable goods, ex-transportation. We got the new home sales again and what their inventories, but here it is. Initial claims went up to 500,000. They've been going in the wrong direction. Now, that could be partly due to maybe some consensus workers in there and people starting and getting more benefits. Yeah, they extended the unemployment benefits, and that was another part of that running that last bill through. I think it was like 26 billion, or that's to states, but they also did the unemployment benefits. Okay, so those claims are going higher, and there are 4-week moving averages. There are different charts that we use on every one of these indicators. It's also part of what SMF Street trains you on, so that you can become an expert. We have a proprietary economic analyzer that takes these over an extended period of time, and what it does, it breaks them down mathematically, and it tells us right where we are. That way you don't have to listen to people on television, pundits, or economists, or anyone else. You'll be taught at SMF Street what each one of these mean, and where the true stuff is, not what a politician is telling you, not what some economist on TV is telling you. You can be trained by understanding the durable good orders and understanding the mathematical equations over a period of time. We have a system and we run it through there, and this way you know how to prepare your life as a human being. Bottom line. And what to look for if you're going to be investing and trading. That's why this SMF Street is a year long, because we take you through 4 quarters. We take you through 52 weeks of all of this here. Not to mention the other component that we take you through is the earnings cycle. There are 4 quarters of earnings. We just came off of the 2010 earnings, which were wonderful earnings, and we were shorting a lot of them. Go look at our live trading videos. Don't forget one thing. We are the #1 live trading videos with live entries, exits during the day. And our analysis and directional movements are done real time. Real time. Sign up for your free 5-day trial. That's the only way you're going to find out who we are. Doesn't cost you no money. It's a big savings, actually, because normally it costs you at least $8,500 for the week to be here. The reason why we did it was to give you transparency. So basically, I'm going to pull this down. I just want all of the SMF Street traders, when you watch the video, we're going to be looking at where they either try to pad the number, manipulate the number. They manipulate these numbers all the time, folks. All the time. However, they can't manipulate SMF Street. I'll tell you why. Once again, we have a deciphering system that SMF Street built over the last 20-year period when it comes to understanding these economic indicators and what they represent and how you going to prepare your life. Now, if I'm taking the GDP down, then let's go take a look at the monthly Dow chart and see where the monthly Dow chart goes. This is a monthly chart of the Dow Jones Industrial Average. And you can see that in 2010, we have a lot of live trading videos where we had shorted this move down, but we called the bottom here. And we went all the way up. This is a daily chart. So, I'm sorry, the monthly one I will do next. So, on the daily chart, from this hook, right up at this top, is that you had, where you got back to that rally, you sold off first year, we called the bottom down here. Why did we call the bottom? Because it didn't want to go any lower mathematically, and when it started up, that created buys all the way up. Daily moving averages were crossing over and doing a great thing. But here's the thing. We told everyone to get out of the market right here. And we have it under our index videos. Go back to April 24th, April 25th. We told the public, exit. They probably wouldn't, but if they didn't, they were going to pay a price. And we were shorting the market right up in here. Right through this whole move is where we were building these shorts. And we have them live on stockmarketpunding.com. Well, they did. That's that bottom. Now, on the daily, what you've had is you've had 1, 2, 3, 4, 5. Oh, 5 days up, we're in a new bull market. No, you're not. But that's what they want people to believe. You had good price support, and you went up, and you made these highs right here. And they couldn't be taken out. Price action failed. the SMF Direct Access Trading Platform said to get net short and use the bear funds that you can make money on the Dow and position yourself and your portfolio. So if I'm taking the GDP down to 1.5% or lower, maybe 1% for sure in 2011. Now, all bets are off. If they extend the tax cuts, well, then we don't have to go down that road. But your people in your Congress and your leader of your country is not doing the right thing, in my view, from an economic standpoint. So let's take a look. This is where the Dow will end up going on this daily chart. I'm going to go now to your monthly chart. This is the one I thought I had up there because the other one said 250 and I'm thinking 200. Here's the monthly Dow chart. This is a real important one. I'll tell you why, pal. The releveraging, the stimuluses worked through here. And we put in that final 2010 high. And in our economic report, we said that the markets would put in the high for the year. Because they're not doing the right thing. Policy-wise. Because they're not. So I'm going to highlight the bearish implications. This line is a 100-month moving average. When we got above it, it was bullish breakout. Because that was bullish then, right above it. They gapped it above it, and then they ran it. However, the monthly distribution for 5-1 was much greater than the accumulation at the top of 4-1 through that month. This is where we were shorting in that month. This prior month of 3-1 is where you had this nice monthly move. But you took all of that out in one down monthly bar. You took it all out. You took out that whole 3-month move. Here's a trend line to prove it. There it is. Now, yeah, we came back with a very sluggish, right after the 4th of July, what's called your summer rally. Okay? And then this red distribution bar is another distribution bar. So that's for the month of August. But then let's blow this up and take a look at the 10-month moving average. I'm below it, bearish. 100-month is resistance, bearish. Another thing. Why do we make money in down markets? I'll tell you why we make money in down markets. You want a profit? You can. You will here. You don't have. You make money when they go this way, but you make money also when they fail. So I'm going to draw. That's that double bottom price action. And I'm going to draw a trend line horizontally right across it. Right there. Okay? And basically, that was your... And we told people 2 weeks ago or 3 weeks ago the summer rally was over. We told people, go find the videos in Stock Market Funding. Tells you ahead of time. Not after the fact. Okay? After the fact doesn't do you any good. You want to know beforehand and the reasons why and the cause and effect. And then how do I put on the trade? Why do I get bear funds on the Dow moving forward long term? Why? Well, we get both sides. This is the monthly July bar. The only bullish thing about it is if it was to stay above this trend line and not close below it, this trend line right here, that's half of the price action movement called the SMF Street pricing mechanism that we use on daily, weekly,